The housing market is absolutely out of control. The latest housing market data for Australia and in the US has just come out today. And in all my years of following the housing market and the trends in the housing market and the housing market data, never have I been more shocked than today. In this video, I'm going to be going over the latest CoreLogic housing market data to show you exactly how much house prices went up in March in Australia, and the latest housing market data for the US shows how much house prices rose year on year in January. This is going to be an action-packed episode full of quality and valuable information, so you're not going to want to miss this one. You're going to want to watch till the end, because I'll wrap it all up to you, tell you what it means for you, what it means for me, how we can prepare, and how we can make the most of the situation. Okay, let's get into it. Now everyone, this is absolutely crazy. Can you believe how much house prices rose in Australia in the month of March alone? That's right, the national house prices rose 2.8%. That brings the national average house price from $598,000 to $614,000. But I'm going to break it down city by city in Australia and in the US to see what cities were the best performing markets and what cities are the worst performing markets, so you can make an educated decision for what you need to do in your area, because the housing market isn't just one market. Every capital city has its own market. So you see these averages out in the media, you actually may be in an area where house prices are falling rapidly. Okay, so to start with the worst performing market, that was Adelaide, and it went up just 1.5%. It's up 3.2% for the quarter and 8.6% for the year. Perth was up 1.8% for the month, 5% for the quarter, but just 6% for the year. Darwin was up 2.3% for the month, 5.4% for the quarter, but on a year-over-year basis, Darwin has been the best performer, up 14.21%. Then Melbourne and Brisbane, they rose the same rate, up 2.4% in the month of March. Melbourne is up 4.9% for the quarter and Brisbane up 4.8% for the quarter. And year over year, Melbourne is only up 0.7% while Brisbane is up 6.8%. Okay, now let's get into the three best performing markets in Australia right now, and then we'll get into the US. So Canberra continues to be a strong performer, up 2.8% in March. It's up 6% for the quarter and 12.1% for the year. Hobart continues to be a very strong performer, and that is because there's such big shortages in Hobart, and really they're having an affordable housing crisis and many people being put on the streets, which shows the bad effects of these booming house prices. Hobart is up 3.3% in March alone. That's right, not for the year, in 1 month. It's up 7.6% for the quarter and 12.5% for the year. Okay, now the best performing market, and you probably could have guessed it, we've seen auctions going absolutely crazy. We've had auction clearance rates around 85%, people paying stupid amounts for properties, $500,000, $1 million over reserve. Sydney went up 3.7% in March alone. It's up 6.7% for the quarter and just 5.4% year over year. And for the first time in a year, the combined capital cities grew at 2.8%, where the combined regional markets grew at 2.5%. So the capital cities are outperforming the regional markets again. And this may be due to a lot of people are moving back to the cities because they have to work from home again. Maybe the commute's too high. And the differences between the regional markets and the suburbs are starting to become very similar. So it's not really worth paying these prices for the commute, where before the regional markets were a lot more affordable, so it was worth the commute. While the markets are rocketing now, they're not impervious, AMP Oliver said, noting that the end of the mining boom triggered recessionary conditions in Western Australia and the Northern Territory. Worst case scenario, we hit a double dip recession or interest rates go up, he said. And I think these numbers are absolutely crazy. And this comes as the RBA and APRA are saying, look, there's no housing bubble here, there's no risk to the financial system, everything's fine, we're not going to do anything at all. That's absolutely crazy. This is the biggest month-on-month price gains since 1988. If this is not screaming housing bubble and financial instability, I don't know what will. And you may think these booming house prices are great for the economy and it's good, but it's not. This means a lot of people's incomes are all going to go into their housing costs, and they're not going to have money to spend in the real economy. Also, this means homeless rates are going to skyrocket, because when house prices boom, also rents are going to follow. He also noted if interest rates were to rise dramatically, it would cause debt servicing problems, people to default on their loans, a recession, and then house price declines. And even Tim Lawless at CoreLogic says he does agree that mid to late this year, the housing price growth is going to slow because of the weakening economy, interest rates are going up, home builder is now finished, and stamp duty concessions are coming to an end. Also, the RBA is ending its term funding facility where it offers cheap credits to the banks. So they're no longer going to be able to get cheap credit, and they're going to have to jack up interest rates because they're going to have to get more expensive wholesale funding from the markets. And with booming house prices, the RBA is also expected mid to late this year to end yield curve control, where it buys bonds to drop the yields on those bonds so the banks can get cheap credit. But with the booming economy and booming house prices, there's no real reason for the RBA to continue to do QE and overinflate the markets right now. And I'm about to get into the US housing market data in a second, so don't go anywhere. And wherever you're watching throughout the world, this is not just an Australian phenomenon, this is not just a United States phenomenon, this is a global phenomenon. But something alarming that happened to me the other day, recently I fixed my mortgage rate with my bank because I do expect interest rates to be going up. And I'll fix it at 1.94%. And I asked the bank, what is the interest rate going to go after the 2 to 3 year term? Guess what they said? It will go to the sustainable variable rate of guess how much? 4.55%. Not only this, but there's a massive amount of interest only loans that are going to be changed to principal and interest at the same time. This is causing a debt trap and a debt bomb. And you may think 2.5%, that's not much of a difference. But have a look at this. With a mortgage of $500,000 at an interest rate of 1.94%, your monthly repayment will be $1,843. But have a look at what happens when your fixed rate ends and you go to the standard variable rate. Your monthly mortgage rate is now $2,558. And many people don't have an extra $600 lying around in their monthly budget, and this may lead to more forced sales coming, along with interest-only loans changing to principal and interest. And it just seems like the media completely stopped talking about that once it actually did become a big issue. Okay, now let's get into the housing market data for the US to see how much house prices rose year over year, and what are the best performing markets and what are the worst performing markets. And then I'll also go over what I think is going to happen over the next 6 to 12 months for the Australian housing market and the US housing market, because there are big risks mounting up. So the S&P CoreLogic Case-Shiller Home Index rose 11.2% year over year from January. Now, CNBC don't have the official data, but they think year over year from February, house prices rose around 15%. So the 10-city annual increase was 10.9%, and the 20-city composite had an increase of 11.1%. That's the top 10 US housing markets and the top 20 US housing markets. And can you guess what were the best performing markets? Phoenix, Seattle, and San Diego. Phoenix led the way with a 15.8% year-on-year increase, followed by Seattle at 14.3% and San Diego at 14.2%. So before seasonal adjustments, the US National Home Index rose 8% month over month. These are the biggest house price gains since 2006. But what happened after 2006? That's right, we had the subprime mortgage crisis. So things are definitely bubbling up, and it looks like this housing market is turning into one of the craziest housing market bubbles in history. Now, the three worst performing markets was Las Vegas, up just 8.5%, Chicago 8.9%, and Dallas just up 9.2%. This also comes as existing home sales dropped 6.6% in February, showing that there's a big supply shortage, with supply of homes for sale falling 29.5%. But something that's happening in Australia and the US is not really the lower end of the market or the mid end of the market, it's the top end of the market that is booming. Have a look at this. When I read this, I nearly fell off my chair. House prices in the US for houses priced over $1 million, guess how much they've risen over the past year? 81%. That's right, 81%. And I'll tell you why. This is from all the stimulus, all the bailouts, all the money printing, all the quantitative easing, all the stimulus checks, the PPE, the bailouts. It's all gone to the rich, and they gave us at the bottom the scraps. But they were a lot smarter than 2008. Instead of just bailing out the banks, this time they gave you little stimulus checks of $1,200, $1,400, which is definitely good, but it's nothing in comparison to how much Wall Street got and how little mainstream got. The small businesses are going out of business while the big businesses are dominating. And what they found out with JobKeeper is many companies made more profits, and they took JobKeeper, they took your tax-paying money, and they paid that to shareholders. But have a look at this. House prices valued $100,000 to $250,000 actually fell 11%. This is showing that there's really a K-shaped recovery, and while the upper end of the market is booming because of booming stock market and booming asset prices and all the bailouts, and all these hedge funds are paying themselves big bonuses and CEOs are paying themselves big bonuses with taxpayers' money, that market's booming. But the lower end of the market's not booming because people, for one, a lot of people have lost their job and they're not getting any income growth, so they can't afford to go out there and inflate house prices in the lower end of the market. So if you're in the lower end of the market and you think that house prices are going out of control, it may not be the case, and in some areas they may be actually falling very quickly. Okay, so house prices are booming, FOMO's at all-time highs. I guess we all better buy in now, not just buy one houses, not two houses, let's get 10 houses. I have to warn you, and this is what the experts are now starting to warn, that they're going to be rising interest rates. Now that all these sellers are seeing these booming house prices, a lot more stock is going to come onto the market. We don't have the international migration to fill up the supply, and all the stimulus is now being taken away, while the situation in Australia is getting worse with more lockdowns. And a big risk that I think is going to happen is people are going to over leverage, like what they did in 2007 and 2008. They're going to FOMO in, they're going to get houses they can't afford because they think they have to pay it. Then interest rates are going to come up. These interest only loans are going to go to interest and principal, and we're going to see a lot of people not being able to afford to pay their homes, and there's going to be a lot of new stock come onto the market and bring prices down. But like I said, people are getting very complacent. Even the bears are turning bulls, and people are throwing caution to the wind. Risk is at all-time highs, margin debt is at all-time highs, and we saw what happened with the hedge fund that defaulted on their margin call. This sent shockwaves through Wall Street. And I think we're going to see more cases of this because everyone thinks the Fed will bail them out, the RBA will bail me out, the government will bail me out, so I'm just going to take on mass risk and hope that I get saved. But that's a terrible financial decision, and unfortunately I can tell by the comment sections, and not just my videos but on a lot of finance videos, people are thinking money printer go burr, so let's go out there and take on as much debt as we can. But unfortunately it's going to end in tears. So guys, what do you think about this crazy housing market, not just in Australia, not just in the US, but globally? Let me know down below. For my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you up to date with the latest housing market news here in Australia and in the US. And I'll pop up some of my other videos here. I'll see you there.